Hello, hello, hello. Welcome, everybody. My name is Jeremy Blossom. I am the founder of TradeStocks.com. It is good to be here. We have taken off a few weeks here in the beginning of July, 4th of July holiday, and so I appreciate everybody coming back. How are we doing? Let me know how I sound and where are you coming in from? I don't know where you guys are. It's 5 o'clock my time. I've got my drink in front of me. Go ahead and take a couple minutes. I'm going to let some people join us. JC will be here any minute. Grab your favorite beverage and grab a pen and paper, and let's get ready to go over some great charts. Phoenix, is it brutally hot there yet? 109. Oh, that's incredible. It's a dry heat, and I bet you're probably used to it. But Missouri, great. Jersey City, that's great. I'm really bummed in Houston. Great. Oh, really? Set the record on my birthday of 116 degrees. That is incredible. 116 degrees. Hey, we got somebody from Baytown, Texas. Thanks for joining us. I am coming to you from Laguna Beach, and look at this guy with the fresh haircut.
What's up, buddy?
Hey, man, how are you?
I'm good.
Great to see that face.
Dude, couple of weeks, no see. You miss me a little bit?
I did, but thank goodness I get all of your lovely, emails, and I saw that the latest interview that you did with your two friends, other legends in the industry. Ooh, I'm drinking my iced tea. What are you sipping on, my friend?
I have a lovely Côte de Beaune, some of the world's finest Pinot Noir. At least in my humble opinion, but what do I know about anything, right?
I mean, you might know a thing or two more than the average bear, that's for sure.
All that matters is that I love it. And that's all that matters. I personally don't give a shit what anybody thinks about Côte d'Or Pinot Noir, even though pretty much everybody likes it too. It's not earth-shattering revelation over here. But I love it. And it's a very selfish endeavor, kind of like your portfolio and the stock market. Like, who gives a shit what somebody else is doing? Like, you need to worry about your own portfolio. Like, it's a very selfish endeavor. Like, you can go help people and stuff like that, but like that, you got to make money in your portfolio first, and then you can go help other people, Very selfish.
100, exactly right. You got to do what's best for you and you alone, because it's your money, not anyone else's.
Yeah, I can tell you, bro, this is the best wine in the world. You could hate it. You could hate it. And you could tell me that this is California or whatever, and I'll be like,
Yeah, right.
That piss.
Yep, to each his own. Well, we have a lot to talk about because we did take 2 weeks off. I'd love to
You may have.
We might provide some structure for what we're going to be going over in the next hour. So everybody, my name is Jeremy Blossom. This is JC Parets. He is the founder and CEO of allstarcharts.com. It is the premier charting market technician program in the country, in my opinion. This purpose of this is, well, first of all, why don't you say hello, JC? And as I ask, straight as you take a drink, say hello to everybody.
It's 8 o'clock. Are you kidding me? We're talking charts at 8 o'clock on a Thursday. Guess what? This is what we do. All right.
I love it. So what the purpose of these are for us to go over, it's called the charting room. We wait till the market closes. We go over what we've been seeing in the last week. In this case, it's going to be the last 2 weeks. And we're going to be presenting the material for you through the lens of technical analysis. JC, what is technical analysis?
Technical analysis is the study of the behavior of the market and therefore market participants. So we don't care so much about the goods and the services in which a particular market deals with. We prefer to analyze the behavior of that market, knowing that the market is a discounting mechanism of future events. So if we want our information, we couldn't care less what the journalist thinks. We only care what the market thinks.
Well done. That's a perfect explanation.
It's almost like I've said that before.
I know. Hey, you should really consider getting your CMT. Oh,
A
wait.
little too polished, JC.
So JC is a chartered market technician. There are like 2,600-ish or less than 2,600 of these chartered market technicians in the
You want to see
world.
something cool, Jeremy? You want to see something cool? Hold on.
Yes.
So I'm building my new office.
Wow, look at that. That's awesome.
Look right here. Where does it say it? It says it somewhere. Hold on. Here we go. Look right there. Number 939.
Oh, that's so cool.
Isn't
I
that
love
sick?
it.
August 12, 2008. Jesus Christ. Talk about perfect timing, dude, right?
Yeah, that is so cool, man.
I just found it the other day because I didn't have it with me in California because it was,
Yeah. No, that's so cool. There it is, folks. That is the certificate for the chartered market technicians. That is I've done it. I am a registered chartered market technician. And like I said, it's extremely, it's a big accomplishment. It's a big deal. And that CMT, as well as his passion for the markets, has taken him all over the world. JC has spoken in India and Japan, all over the United States, and some of the smartest guys in the room. When I say smartest guys in the room, what does everybody think of? Smartest guys in the room are typically your big institutions, hedge funds, people that we've entrusted to manage a lot of money, okay? And even those smartest guys in the room need advice. They want to get inputs and opinions about what they think is what's going to happen.
They have more to lose than anybody else.
They got more to lose. And so they also seek out not just any old information, right? They don't go down to the local corner and ask people about what they think is going to happen in the stock market. They want people who are trained experts, people that have a certain methodology or approach to the markets.
Dude, Jeremy, I got one guy, right, that I know of, probably other guys do that too. They when they want to do their research, like let's say they want to invest like in Victoria's Secret or some woman's brand, like they're like a 50-year-old dude, like they're the furthest thing from a teenage girl. So the way that they do their homework is that they pay teenage girls to go shopping. Like, hey, go to this place, go buy whatever you want, or buy a specific product in some cases, and then just call me afterwards and tell me everything about your experience. And then, or like, it doesn't necessarily have to be teenage girls, just one example, but like an area, a segment of, that is just not you, not, right. He could walk into Home Depot and be like, okay, hammers, he could walk into Dick's Sporting Goods and be like, okay, golf over there, hockey over here, right? But like when it comes to stuff that he just doesn't understand, obviously, he pays others to do so and they're happy to do it. It's like, oh, you're going to pay me to go shopping? Sure. And all I have to do is tell you about my experience? Sure. But that's great data. So like these guys go a long way to get the data that they want. And then that's just a micro little nothing burger of how far people go to get the data. Now that we have a coronavirus and COVID and it's changing the world, who do you think has better information? Or who do you think is sharing that better information, I should say? Because the government probably has great information, but they ain't going to tell you, right? Who has that information? And who's going to get the better scientists that are going to sell out and go consult the hedge funds, right? They're going to get the smartest minds in the world, and they're going to act on that information. And the act that they're performing, whether it be buying or selling stocks, can be seen in the market. So why are we going to turn on the news to hear what the White House correspondent said about COVID? Like, who gives a shit? Like, I want to know what Price is doing because those guys have the data, and I want to know what they're doing with the data. And they're buying stocks, by the way.
Yes, exactly. And that's exactly right. And these people, like I said, they're looking for information. They're looking for, like you said, they'll go to the nth degree. And they
have
also
more money than God. Are you kidding me?
Yes.
There's a book called More Money Than God about hedge fund managers.
Where I was going with that is that they also go to you. And so they go to you for this information about what we are going to be discussing tonight. So it's a real treat. Trade Stocks is really, really proud to have someone like you that we can partner with your expertise. You could be doing a lot of things on a Thursday night. You choose to be here with us and with this community. And for those of you who are brand new, this is kind of my introduction to tradestocks.com as well as JC Parets with allstarcharts.com. There are always regulars. There are people who have been following JC for a long time. These are real paying members and subscribers to JC services. They're here as well. You'll see them be chatting and coming up with ideas. But let me just kind of talk about what we're going to do over the next 51 minutes for everybody. So the way that we've been breaking down the charting room is we begin by hearing from JC what's happening in the marketplace. He has a particular approach, which he'll go into in just a minute, and he's going to tell us what he has seen happening through the lens of technical analysis, what he just mentioned what that was, right? Then from there, we go into specific trades. So every single week for free, we've been going over the markets and JC has been calling out trade signals. Why do we call them trade signals? Well, this presentation and anything that we discuss in here is for education purposes only. If you decide to go and take one of the calls and make one of the trades on there, that's what you've decided to do. This is not a solicitation to buy or sell any securities under any circumstances, because trading involves risk of loss and it's not suitable for everyone. So we come up with these ideas. He'll tell you what he thinks was a good entry point and an exit point. That's what the signal. You can ask questions in real time. So the more feedback that we get from you, everyone who's here, the better the charting room is going to be for everyone. So don't be shy. Don't be a bystander. Give us your full attention. Close out all the tabs. Put your cell phone. Close the room to the door you're in. And let's hear what our man JC Parets has to say. What do you think about that intro? Oh, I got one more thing before I forget. We have something I get to share tonight, JC. That we filmed, JC and I, before COVID, before the world came to an end. JC flew out to Newport Beach. We're here in Laguna Beach, and him and I sat down for the day, and we actually filmed what we were calling the charting greatness. This is through tradestocks.com. We sat down with JC, and for everybody who stays to the end, I'm going to drop the link in here into the chat feature for everybody who's participating. So it's an hour-long presentation that we produced with JC and his Emmy Award-winning director. So it was a really cool collaboration. So we're going to share that link with everybody tonight. He has some amazing insights and some amazing wisdom in this video that you guys do not want to miss, as well as probably, I think it still is, it's probably the trade of the year, where he called getting out of the stock market, again, way before it had the big sell-off. So he goes over that in this document.
And you want to know something? Why? Because it's not like we're like such geniuses. It's because the institutions with the big bucks can pay the right people to get them the information they need, and they disseminate that information by acting upon the market. And that's information for all of us. The banks peaked in December, Jeremy.
Yeah.
The most stocks peaked in January. People are like, oh my God, this crash came out of nowhere. Yeah, if you had your eyes closed, or you just weren't paying it, or just weren't keeping track, like it was quite obvious. I've said it before, I'm going to say it again. I know I sound like a dick every time I say it, but this crash came after more warning signs than any stock market crash in history, and it's not even close.
Yeah, that's amazing. And so, but for many people who are headline traders, and I'll stop right here actually and say this. If that is true for you who are here tonight, you're in the right place. If you did not know in December, January, and February that the market was going to do this, you are in the right place, because people who follow JC and who subscribe to allstarcharts.com, they were a part of the discovery of this with your tutelage, with your discovery, with your analysis, JC. You were leading the way on this. So if you didn't know that, and by the way, it's okay. I've been turning my friends on to you, JC. They've been coming to this on Thursday nights. They text me and call me afterwards, and they're like, wow, I didn't know.
This Cuban guy's crazy. What are you doing with this guy?
So they love you, and they didn't know, and they're honest with me, and they're like, I didn't know that the market was going to crash in February. So
and to be clear, I didn't know the market was going to crash, but we did know that we didn't want to own any stocks, right? It was kind of like, no, this is unlimited downside.
I'll take it even a step further. You didn't know it was going to crash. You knew you didn't want to own stocks, but you also knew what you did want to own.
Yeah.
So I mean, like, let's go all the way with it. So yes, and that's true. And that's so you, by the way, JC, that statement. Like, I didn't know this. You are so transparent and everything.
Yeah, I didn't know the market was going to have the biggest, fastest crash ever.
Yeah, right. No one knew that, but we did know that it was getting unhealthy, right?
We didn't want to own any stocks. So.
Yeah. And then one more thing on our approach to this whole thing. When I say ours, I mean JC's. We talk about asymmetric risk reward ratios. Okay. That's a big, long jumbo that basically this is what we're trying to talk about.
Marketing guys hate the mumbo jumbo stuff.
They hate the mumbo jumbo. Let me cut through the bullshit here. All right. Here's the deal. JC does not have a crystal ball. I don't have a crystal ball. I have no freaking clue, and I'd use a stronger word if I didn't want to offend somebody, about what we think is going to happen tomorrow in the marketplace. We do not know. We have no clue, okay? So what can a stock do? It can go up, it can go down, or it can stay sideways. That's it. That's all it can do. It's all it can do. It's not magic. There's nothing else it can do. It's going to go up, it's going to go down, it's going to go sideways. All right. So when you place a trade, and you have a 50-50 chance of it going up or down, right? It's going to go up or down. It's going to go up or down. And you have even risk, 1-to-1 reward ratio. You do the math on that. You're just going to spin your wheels. If you find asymmetric, means more upside potential than you can lose, statistically speaking, and then you place a trade, and you're right 51% of the time, 50% of the time, you're just flipping the coin, but you're making way more money when you're right, and you're losing a lot less money when you're wrong. That, ladies and gentlemen, is how you build a winning portfolio, is by constantly doing this. Now, if you can be even more accurate with your calls, then it starts to be exponentially.
Jeremy, the math is so good that some of the best traders of all time, like you could see they're like running trades, they actually get more of them wrong than right. And they're still the best traders of all time, because it's not about being right. It's about making money. And if you're going to make a lot more when you're right and lose a little bit when you're wrong, I mean, that's going to compound. Like, I talk to a lot of venture capitalists and I have a lot of friends, and, I got these guys up my butt because we're building some cool technology that they want to be a part of. So now I'm really in VC world. So I talk to these guys, and, for them, the things that they're looking for are very unique opportunities that they can make 40 times their money. Like my close friends, that's what they're looking for, 40 times their money. But they know that they're gonna invest on a bunch of zeros. $1 million here, 0. $1 million here, 0. $1 million here, 0. But then $1 million is gonna turn into $1 billion. Boom, got them. Now I don't care about my zeros. That one paid for it all. So in our world, it's not that extreme, right? It's a smaller version, more volume version of that philosophy. But think like that. Not that we're just swinging for the fences like angel investors. Don't get me wrong. That's not what we're doing here. We can get away with base hits and doubles and triples too. Not everything needs to be a grand slam, but those grand slams do come, and boy, do they take care of those pop flies and double plays.
I think we should get t-shirts made. It's not about being right or wrong. It's about making money.
It's the only reason we're here. If you're here for any other reason, like, you're very confused.
Yes. Well, and that's true. Or hey, you know what? We are pretty good looking, right? They could just be here for the show, bro. They could just.
I don't have that hair that you got. That hair, man, that's something. Where does someone get product like that?
You don't shower for a month, and then
you have like a skunk living in there or something. Like, that is like quite a home for some of these animals.
It's a COVID hairdo.
Yeah, I see that. I like it. You ever get in a fight, you could just like headbutt him with your head.
I don't know if you heard, but California has locked down everything again. We've gone like backwards, and so I'm back to long hair.
Oh, you mean people in California don't give a shit, huh? I can't imagine. I can't imagine that.
Yeah, yep, you're exactly right. All right, let's get to what everybody's talking about. JC, what are you seeing in the marketplace? I know you got some things to show us. The floor is yours, my friend.
So stocks have been going up, so that's worked out well. One point I definitely want to reiterate, so we came out with our quarterly report this weekend, and what we did this time was that we recorded the meeting of the minds, if you will, of us putting together the quarterly report. So we recorded that. So we're actually publishing that tomorrow. So definitely so you can kind of see behind the scenes the thought process and the back and forth with the team. Bruni's more international and fixed income currencies, commodities. Strauss is more quantitative, bottoms up. US equities. I'm all over the place. Sean is options, right? Great conversation. It'll really give you some cool insight. And one of the subject matters that, you know, kept coming up is the need for rotation, right? So what's gotten us here? Number one, we were buying the strongest stocks in early to mid-March. The Zooms, the DocuSigns, not because of their COVID-centric nature. It's just, it makes sense that the ones doing well are the ones that do well during COVID. Zoom, right? Regeneron, things like that, right? Activision. It makes sense, but we care less about it making sense and more about what the momentum and relative strength is doing. Okay, fine. So we created the coronavirus index. Remember that? We bought all these stocks. They did very well. A month later, in April, we took a couple of shots on the short side. And guess what? We got steamrolled right away. So what was happening in early mid-April? We put on a couple of shorts, got steamrolled. Our longs were all exceeding our targets. Hello, what is the market telling us? Do more of what's working and stop doing what's not working, you idiots, right? So fine. So what did we do? We took that information and we stopped shorting stocks. And we used the information that every time we did that, it was like the kid putting his finger on the stove. Stop doing that, JC. You know, stop shorting stocks. Doesn't work. Do more of the other stuff. So we did more of the other stuff. And this was in April. So 3 months later, now we look back and we're doing the whole, all right, what did we miss in the first half? What did we do wrong? What could we have done better, right? We like to do that. It's really important. Yeah. And then Straza was like, oh, maybe we got too cute in April. And I'm like, no, bullshit. Because if we wouldn't have taken those shorts and we wouldn't have taken those shots, we wouldn't have gotten that information. And hadn't we not gotten that information, would we been as bullish as we have been the last 3 months? And I'd say probably not.
That's right.
So I think it's an important point. And then in terms of the rotation, let me show you guys. So this is basically, these are the heroes, right? This is America. This is the NASDAQ 100. This is technology. This is semiconductors. These are things that aren't happening in other countries, big sectors like this doing these things. The US is the big winner. It's no secret that its exposure to technology is a big reason for that. And by the way, Google and Facebook and Amazon, none of these are technology stocks. So add that to the mix, you know what I mean? So it's this whole mega cap communications tech, rare digital assets, as Howard calls them, you know, globally. And it's really interesting because it's less about the countries and the types of countries and more about the sector. So like Latin America is a freaking disaster. Argentina, like, don't even get me started. But Mercado Libre is a rare digital asset in that world, and it is kicking ass. Why? Because it's less about the region and more about the type of company that it is. It's a rare digital asset, again, as Howard says. So this is what we need. We don't have bull markets in America without financials participating. So this 23 level, we've been calling it out for weeks. I feel like almost a month now, or probably about a month. And we're not going to go higher as a market without rotation into these three laggards: financials, industrials, and energy. We're starting to see it into emerging markets. And Ralph Acampora, the godfather of technical analysis, says it all the time. Bull markets, you know, the lifeblood of a bull market is sector rotation. So we need that sector rotation. So, and we're starting to see it. It's really, really interesting. And we're doing all sorts of like fancy dancing bubble graphs to show that data and that rotation. And so we're building cool data visualization tools to show that.
Before you move on, pull up that first chart, the one within the NASDAQ 100.
But this is America?
Yeah. So again, what I'd love to do, one more back, sorry, the other first slide. The NASDAQ 100 and the,
sorry.
It's okay. So what I wanted to call out here for everybody, I worked for a hedge fund for 7 years. I own my own financial advisory firm for 3 years. Okay. And we were a little bit of some technical analysis, some fundamental analysis. We were options traders on derivatives. And as a financial advisor, I was kind of more tactical money managers at the time when I was running that practice. And so the trade stocks is all about like helping people identify winning strategies and then connecting them with the people who provide that service. So JC is my favorite go-to guy to connect people with because he's got a winning service. He's got a winning strategy, and a way that he approaches things is pretty phenomenal. So what I wanted to call out here was rotation, and maybe this is old news for some of the people that have been following you for a long time, but for the new people that are here tonight, this is important. So the NASDAQ 100, he says, is the chart of America. This is the thing that he told me. It was like in a couple of their charting rooms ago. He was like, this is the chart we need to be concentrating on because this shows us the bullish, movement of the stock market. And so this is where like the big money is going. This is where a lot of the companies that are leading the charge. And so correct me if I'm wrong, JC, what I hear you saying is that you've got this, the leader, all right? And the leader's killing it. What's going to happen as more money, these hedge funds are putting more money into the leader, they also start to invest in other areas. And
yeah, because what they're looking for, here's the difference between institutions, and I'll zoom out for a second. Here's the difference between most investors, 99.999% of investors, and then institutions that manage 99.9% of the money, right? It's the opposite. So 99.9% of investors only represent like a tiny little fraction, and then a few amount of investors represent the rest of it. So what they're looking for is alpha. And alpha is the percentage that they return in addition to the market. So if they're going into a month that there's a mean reversion in energy, and energy returns double digits in a month, and they're in the leaders, former leaders, like tech, let's say, and tech is flat for the month, digesting gains, which is something that's perfectly normal. And that particular month of June or July or whatever it is, there was sector rotation where energy had double-digit returns and you were overweight tech and they were down 1% or only up 2% or something like that. That alpha was in energy. So these institutions are always chasing that alpha. We as investors don't have to worry about that because they have to think bigger rotation. We could think individual names. I don't care what energy does. We're buying Zoom. It's much different from an institutional perspective to a retail perspective. Now, with that being said, you might not care about that alpha, but there's information there. And in order for the market to continue higher, you need that rotation, right? Because it is a market of stocks. So for the S&P 500 to go higher, you need to see an expansion of new stocks making new highs, right? Not fewer and fewer stocks making new highs, more and more sectors, more and more stocks, more and more countries. That's breadth expansion. And it's necessary for the market to continue higher. You can't just have technology by itself and communications by itself and financials are breaking down new lows. Markets don't go up in that sort of environment. Rotation happens in that sort of environment. If you start to see XLF financials breaking below 23, holding below 23, that's probably happening in an environment that stocks are under pressure. If we're able to rotate and get that rotation into the cyclicals, industrials, financials, energy, that's classic bull market rotation. Classic.
Yep. That means that things are going well and people are buying more stuff.
Those are the things that happen when we're being rewarded for buying stocks. Those are historically the things that are also happening around us.
Yes, that's exactly right.
And guess what? We are being rewarded for buying stock, so it makes sense.
Yeah, and so it's like when you're making more money in your household, right? And I got 2 little kids, and the kids are asking for stuff. You're like, yeah, sure, yeah, you can have that. Where we're going to dinner night? We're going to that nice place. And like I remember growing up as a kid, anytime we ate out at all, something good happened with my dad.
You guys are in Laguna, so you're all fancy,
Well, I grew up in Cleveland, okay, so. But it was always like a nice thing out there when we would do something, and that was because there was more money. My dad was bullish his career, and he was excited for what's happening. They spend more money. That's a lot like what these hedge funds and these big things are doing. If they get more excited and feel like the risk is off, then they go on or into the market even more, and so they start to spend more, so to speak, and that would be another way to kind of do it. Anyway, sorry to derail you. I wanted to call that out for everybody who's watching, why that makes sense, and it's something that you've talked a lot about as this rally has continued, because a lot of people had a lot of questions on it. So continue.
Yeah, and so people are like, okay, JC, what's it going to take for you to get bearish, right? Well, one of the many, many, many signs in February and January of market. So back in the fourth quarter of last year, we were super bullish, and probably the biggest bulls on Wall Street. There was a lot of pessimism according to our data, and people would ask me, JC, what's it going to take for you to get bearish? I'm like, well, breadth deterioration. So fewer stocks making new highs, fewer sectors making new highs, fewer countries making new highs. We're just seeing the opposite. We keep seeing more and more new highs. So what the hell are you guys worried about? Okay, fine. That was in the fourth quarter. We bought a lot of stocks. That worked out great. Fine. We come into the year looking, okay, fine, JC, what's going to get you bearish? Well, breadth deterioration. Fewer stocks making new highs, right? So anyway, so here, because we were talking about it, notice these are stocks making new 21-day highs with new highs in the S&P into February. Most stocks had already peaked. Look at the list of 63-day highs. So with new highs into February in the S&P 500, only a fraction of stocks were making 63-day highs. And then somebody's like, well, JC, why 21 and 63? Those sound like pretty random numbers. It's like, well, the 21 days is about a month of trading days. 63 is about a quarter. So that's why we use those numbers. But I wanted to show you that's what's going on now. And then what's going on now is that we're getting expansion in breadth. New highs in S&Ps. We're getting twice the amount of stocks making new highs than we did in January. Are you kidding me? People are like, oh, weakening breadth. Like, what do you mean weakening breadth? Like, are you looking at these things with your eyes closed? What the hell's the matter with you? Weakening breadth. We just got the biggest breadth expansion since 1991. And every time we get breadth thrusts like that, markets rip afterwards. People that tell you that market breadth is deteriorating, I think they need to be, put in what are they, the chart prison for the chart crimes? What do they say?
Yeah, it's a real thing, actually. I think it's in, it's like somewhere.
It's like if it's on Twitter, it's real.
Yeah, for sure. Yeah. Oh man, there's been some wild things on Twitter. Great, man. I love that overall feeling. As you showed that last chart, we have started to see somewhat of in certain markets, a little bit of a decline recently. And today, for example, I see that we had slight down, slight red here across the board. But we did see things like consumer staples was up, utilities were up. Kind of go over what you've seen in the last 2 weeks since we weren't here, and what are you looking forward to, as we look at the end of this month and going into Q3.
Get on board the gold train, baby! Choo choo!
Yes, there it is.
No, we've been on board the gold train. So at this point, like we're just like, opening the window and like hanging our heads out like in the wind, it's kind of what we're doing. We've been on this train for a while. For those unaware of why we were in this trend, well, notice how this chart goes from the lower left to the upper right. That's the kind of thing we're looking for. Like when you're at a bar, like, are you going to go up to the pretty girl or are you going to go up to the not so pretty girl? Like we're going to go to the pretty girl, this is like that. Higher highs, higher lows. These are uptrends, man. We buy uptrends. What do they say about uptrends? A trend is your friend with benefits.
Yeah, absolutely. Gold is one of those that I keep asking you about. I've been following gold with you for ever since you really said, hey, this is a good time. 1580 was the number that you called way back in the day. You said, hey, if it's above 1580, then it was 1600. If it stays above 1600, you've been all good. Your target's been about 1900 for gold. And so this would be a good example of you been calling this. This has literally been pretty much something that we've been talking about all year. Gold quite wasn't there early, like January, February, March area, finally breaks into that. And from here, it's gone, continue up. And I think that the upside potential, you said you readjusted after 1900. So it's really cool to see, all of this be shaping up for us nicely. So that's a great example of a trade that you've been doing really well.
And silver, man, silver's making moves. Here, let me pull up a silver chart. You guys want to see some silver? I'll show you silver. I got silver. What is that JC song? I was wearing platinum when y'all thought that was silver.
Yeah.
Man, I have a good silver chart. I have so many charts, Jeremy. Like sometimes it's a little overwhelming how many charts I got. I know my clients can attest. Like, JC, really, bro? 160 charts? Yeah? You couldn't narrow it down to 100? It's got to be 160? All right. Um, are you able to see this? No, you're not seeing
No,
this.
not yet.
Look at this. Look at this bad boy. We
Mm.
ain't going nowhere. We ain't going nowhere. We can't be stopped now because we bad boys for life.
I like it.
$19, man. Silver breaks out above 19, man. You got 50% of upside left here. It's a lot in silver. 50%, dude. It's a lot.
That's a lot.
It's a lot.
So this is a risky play, but silver I know really, really well.
Risk my ass. That's not risky.
Well, I'm
19
not
bucks.
done
It's
yet.
stop.
You hadn't even heard what I was about to say, dude. I'm giving a disclaimer here about what I'm about to talk about doing, and I just don't want
It's the widowmaker of precious metals, silver.
I traded the futures market for silver. Okay, if you go back and you pull up a chart of silver back in 2000, I think it was 2007, when it went up to like $48 an ounce.
2010.
2010, thank you. 2010 up to $48 an ounce.
There's people we still haven't heard from since then, by the way. They just disappeared. Started off on stretchers, these silver longs. Whoo!
So I was working for the fund, and we had some accounts that were pretty speculative, and I had a guy, and we were selling naked calls against silver as it was heading up towards resistance. And I didn't have you to call back then to tell me what was going to happen with
What
silver.
a bummer that must have been.
And the dude loses like 200 grand in a couple hours, right? On these calls. Anyway, we immediately flip because we don't care, right? We're wrong. We immediately flip and go buy. And so on the futures contract, okay, if you buy options, when you're buying options on the stock market, you're controlling 100 shares, right, for every one option. The commodity markets, the futures contracts, are an individual asset class. So silver is its own asset class, all onto its own. So the contracts are different. For silver, for every one contract, do you know this, JC? Do you know how many ounces of silver you can control for every one future?
No, we have a calculator we built that does all that for me because it's always changing.
It's 5,000. 5,000 ounces for every one futures contract. So gold, when you go long futures, gold futures, it's 100 ounces of gold for every one contract, right? And for silver, it's 5,000. So you can go and buy options on silver, and you're actually controlling 5,000 ounces for these call options. So if JC is, and again, this is why I said this is a risky move, and this is not a recommendation for anybody. I'm just simply explaining that I have been there where we started buying these call options on silver when silver did make that flip in 2010. We were buying everything, depending on how risky someone wanted to be, everything from at the money to $50 and $55 call options out of the money. JC, we bought those call options for $500, $500 to $250 a piece. When silver soared, we were selling those bad boys for anywhere between $2,500 to $3,500 up. Some of them $4,000.
Kudos for flipping the trade.
Yeah, we were like, all right, we're gonna go. Anyway, it's a fun story. Silver, when silver runs from a leverage standpoint, I love it. It's
evidence of risk appetite for precious metals. You know, when precious metals as a group are doing well, silver tends to outperform.
It does.
That's where the alpha is.
Yeah, that's where the alpha is, and that's where like
exactly. Lately, it's been a lack of alpha, but that's another story.
It's where the smart money goes. Honestly, if you're going to take advantage of the precious metals in general, you go to silver because it's usually the dog, and it turns into the darling of the party. So. Long story there, silver, I like it, above $19, see a 50% upside. There's a lot of different ways that you can play it, but I like silver too.
I want to show, let's talk about some of the Robinhood trades.
Yeah.
So for those unaware, we've been, I mean, listen, we got, you've met Thomas, right, Jeremy? You
Yeah.
met Thomas. He
Mhm.
lives right by you. He lives in
I
Irvine, right
know.
there.
Yeah.
Yeah. So good guy, Canadian. He's got his green card. He's all excited. He like loves America. um, so he's like brilliant, dude. Like he's worked with like Panasonic. That's how he got his green card. Like he's killer. And like we're building all these like algorithms. Like this stuff is so above my pay grade, dude. You have no idea. But all I know is that like I know what I want, and he's building it. Like they're building all sorts of stuff. It's so sick. So anyway, the data that we're getting, I mean, we just put on a nice. I'll tease it. We just put on a nice one. I'll put that. I'll show you guys in a second. But let's rewind a couple of trades in the past. Tesla has been a monster. It was one of the biggest. It was one of the biggest week over week changes in ownership by the Robinhood accounts, and man, did they nail it. They've been on fire, these Robinhooders, man. Talk about great freaking data. Small investors, the dumb money. These guys are doing a hell of a lot better than the professional hedge fund managers. And then the best part is that there's going to come a point where we're going to want to bet against them. I mean, we already are. I'm going to show you the Nikola. Like we're already betting against them. So we don't have to just, all we're getting notified is when a bunch of crazies are buying a bunch of a stock on their cell phones. Like that's really the information we're interested in. Then we'll bring in the human element and decide, whoa, these guys are onto something, or woo, this is a fade, right? Robbing the hood. Okay, so here's the Tesla breaking out, just home run. And, the relative strength is the real lesson here. Notice the relative strength, and look at this monster base coming into the year. Like this is classic, guys. So forget about the chart itself. Just on a relative basis, it set it all. It was also part of the coronavirus index, so one for the good guys. So Tesla hit our original target and exceeded it. So in July 17th, we had our target, and then it exceeded it and hit our next target, or got within pennies of our next target. So Tesla was an absolute beast, both plug and workhorse. I think both workhorse hit our target in 5 days. Plug hit our target in 2 weeks. Actually hit our target the next day. It was up 75% in 2 weeks. That's what it was. But these things are moving. So that's what these signals are giving. And these are huge percentage. Workhorse, 150% in 5 days. These are monsters. And then on the short side, look at Nikola, down 30% in 2 days after the short recommendation when it broke down. So again, relative strength really confirming price. So it just goes to show you, there's an old chess battle where you can either be a human playing chess, you could be the human with a robot, or you could be just a robot. And the humans with the robot, they were the winners. And we see it. We don't use the robots for everything. We bring in the human element. But man, the robots do a pretty damn good job of building some lists for us to start going through,
Yeah, absolutely. And that's the future, man. It's where everything is going. It's the combination of AI, robots, using that in combination with the human element, I think is the perfect mix. So I love that you're doing that. That Robinhood, for those of you who don't know, it's been something new that JC has been doing. You are so innovative. The ideas that you come up with, what your company is trying to do at any given time. This information has been it's been out for a while. It was you guys who said, hey, let's turn this into under the hood. Let's look at this data. There's something here, and then dissect it. And like you said, add this extra component to it. Let's add some smart, specific, measurable, attainable, and realistic, timely assessments to what this data is showing us. And you are doing some amazing trades. The trades that are coming out of there, you just blitz through them. Folks, these trades have been fire, like fire, man, fire.
Dude, Strives is down in Key West doing like backflips. He's like, "Did you see the workhorse?"
Yeah, we're talking about it in the office here, man. Your symbols are getting thrown around all sorts of different places here.
Dude, it's hilarious. But listen, want to know the truth? Like anything else, the reason we're building this stuff is because nobody listens to me. Like I'm here, I'm in a guide. Like I know like every CEO of every charting software. Like I know them. I'm friends with a bunch of them. I'm like, guys, you need to build this. Like, all right, JC, dancing bubbles with Jasmine. He's like, all right, I'll add it to the list. Like, they think I'm crazy. So I've had enough. I'm sick of it. We're just building our own shit. I'm done with it. I'm done with it. They don't listen to me. Jeremy, you listen. And I appreciate that. But these guys, they don't listen to me. Like, you think I'm like lying? Like, hello, trust me. These are cool tools. Build it. They don't listen. So we're doing it.
Well, the fact that you make me money and with your crazy ass ideas and the stuff that you send out, I absolutely will listen to you.
Wait
So
till you see the dancing bubbles with jazz music.
I
Wait till
can't
you see
wait.
this.
If you're excited, I'm excited. It's always
Oh
been
my
really
God, I'm so
good.
excited. Howard's excited too. He's like, holy shit, this is really cool. I'm like, I know. All right. So look at number 2. This week's increase list, Moderna is a $30 billion company. And the chart is sexy, baby. Look at this. Big base, breakout, consolidation on a relative basis. Remember, I didn't like set this up or tee this up, but how many times I showed you the Tesla? There was another one that I showed you that was showing up on the relative basis. This is the same thing, dude. So beautiful chart. 80 bucks, that's the level. If we're above 80, long all day, baby. 122, 50% of upside. What more do you want? Come on.
How many people here want to become more consistent with their trading? How many people place a trade? I do too. Everybody wants to be more consistent. How many people, when they are trading, every single time they find a trade, it's a little bit different? You see, most amateur traders, when they're going and looking at stock markets, truthfully, if you're being truthful, you have some bias towards that ticker symbol. And the reason why you got into that stock was maybe a little bit different than the other stock that you have. And you have a story behind every single one of the positions in your portfolio. What if you could get more systematic? What if you could say no faster and be like, that is garbage.
Like the way I see it, like grow up. Like, do you really need a bedtime story?
Right.
You know what I mean? Do you really need to, do you really need to waste your time, like somebody to tell you a story so you can sleep better at night? Like, grow up. Like, that's not, you're not a baby that needs a bedtime story. Like, that's not what this is. Like, who cares? Moderna, chances are probably some kind of like science company that's probably doing something for coronavirus. It might be a vaccine. It might be, I don't know. I have no idea.
Yeah,
I don't even know if it has anything to do. I think it does.
It's like, well, we'll just go down that road. We're saying the same thing because when you start to, oh, this does this, what's the first thing you think of? Well, what other companies are doing this, and can I get a better price for this? And you start to like, well, do I even believe in that technology? And you start to do all these rationalizations.
And the crazy Robin Hooders don't like those other ones. They want this one. So that's the one.
They want this one, and for us, we're here to make money. And so what JC does is you have a systematic approach to how you're looking at information, so you can say no. So you can say, nah, move on. I don't like it. Nah, I don't like it. Oh, I like this. I like it because it looks exactly like this other time I made a shit ton of money. Oh, and guess what? Remember this other time I made a shit ton of money? It looks exactly like that. And this other time I made a shitload of money, it looks exactly like that. And what do I see here? It looks like this again. Does that mean you're going to make a shitload of money? We don't know. Have a crystal ball. We're not saying that. We don't know what's going to happen tomorrow. That's not what we're saying. But the probability of us, because it looks exactly the same, that is a way, way smarter rationale to get into that trade with a proven track record than it is that, you see the CEO, he had this thing that he had in his news conference that his brother-in-law cracked the code, and you know what I mean? Whatever shit story that comes out, that isn't repeatable, that isn't scalable. You're not going to find a CEO with a brother who figured it out every single time that you're going to go and buy a stock. You're not going to get that same, duplicity. You're not going to get that consistency, and consistency provides accuracy. Accuracy provides confidence. Confidence and accuracy and consistency provides real money in real trades.
Wow, I like how you put that. It sounds like you said that before.
I mean, it's true, dude. It's absolutely true. So anyway, I like what you're doing there, and I think that the trades just speak for itself. People may ask themselves, "Well, JC, that looks great. How do I get access to such a service?" All-Star Charts is where you go to get access to all this that we're talking about. If you're not already a client, then you definitely need to be, because this is going to be
and the product's only getting better. Wait till you see these dancing bubbles. I know some people are like, what is this guy talking about with the dancing bubbles? Wait till you see this.
I love it, dude. Foreshadowing at its best. All right. We got a couple people that raised their hands. Do you have any more charts you want to show us before we open it up to the group forum?
Be careful who you ask that question to.
Yes. Well, because I know that
Do you have any charts, JC? Any charts laying around you might want to talk?
I know that you gave me my gold chart because you know I'm going to ask. I actually, when JC shared with me his Q3 report, my little response back to him was, why did I have to wait till page 58 to see a gold chart?
We're going to get better with like our table of contents for like the really long stuff.
Yeah, because I was like, but I read it all, dude. I read it, everything I did. And in full transparency, if you would have put gold at the top, I may not have gone all the way through. No, I'm kidding. But I did go all, and I did finish. It was unbelievably well done. And everybody who's a client of yours, I'm sure they think the same. It's fantastic. There really isn't anything like it. Truthfully, you guys, all I do is I work with people like JC. Okay, I know we have over 200 clients. And all we do is do this. There's nothing like that, JC. There's literally nothing as intelligent, smart, timely, well put together, complete than that. It's fantastic.
So with that compliment, we're going to go long Shaquille O'Neal and short Kanye West.
Okay.
So I got this one friend. His name is Jeff Mackey, good buddy of mine, down in San Diego. He's an expert at anything consumer. You know, restaurants, consumer brands, internet retail, like anything where the consumer's behaving. This is the guy, you know. And I'm like, I mean, I had him on the podcast. I thought it was a really interesting conversation, and he loves charts, and we're buddies, so it's fine. And hates restaurants except for Mickey D's and pizza. So I'm like, what about CVS, Walgreens, Rite Aid? He's like, sell. And I'm like, what about the restaurant? Because he said earlier he liked Mickey D's. I'm like, any other restaurants? He's like, pizza. I want pizza. I'm like, what, Domino's? He's like, no, Papa John's. Give me the Big Shack. Big Shack. And I'm like, and then earlier he was telling me how the whole Kanye West Gap thing is like such a fade. So like by the end of the podcast, I'm like, hold on. Is the pairs trade of the decade long Papa John's short Gap? And he's like, well, while you did put words in my mouth, I will stand by that. I'm like, he's like, the pair trade of the century could very well be long Shaquille O'Neal, short Gap. So for those who are unaware, I certainly was, because I don't follow like which athletes and recording artists are doing what deals. I really couldn't care less. This particular gentleman is interested in those things, and people who watch TV probably know, I guess, that Shaq is doing Papa John's, I guess, commercials now. It's news to me, but interesting. So long Papa John's with Shaq, short the Gap with Kanye. That's the pair trade. So I'm like, that's interesting. Let me make that chart and see what that looks like. And man, looks pretty awesome. It looks like an uptrend to me. So just interesting sort of random pairs trade brought up by a really smart friend of mine. Worth a look.
I like it. I love it for just the story in and of itself. And again, the innovation that goes on in your brain, bro, to come up with Shaquille O'Neal to go along and fade Kanye
West. Having a
West.
conversation. He's like, fade the Gap. Not the Kanye West deal. It sucks. Faded. Massive fade. And then the Shaq. He's like, yeah, baby, give me pizza. Give me the Shaq. So I'm like, okay, so what? Long Shaquille O'Neal, short Kanye? He's like, yes.
So you're kind of showing off, I'll have to admit, because here's the deal, right? There are some of us, me, who spend more time than I should looking at the stock market, trying to find my own trades, right? And look at things that I'm owning and stuff like that. I feel like I'm playing basketball with Kobe, right? Like when I'm like thinking of a million things, whatever, and you're just like, oh, there's a Shaq, Kanye trade. And that's like you doing a 360 dunk over my head as I've been like running my fat ass up and down the court trying to play D on you. And like, you're like, oh, just do this, bro. Like it also is a testament to the skills and knowledge that you have, because frankly, like, again, to even get there and to do this and the funny thing is it's actually makes a ton of sense too. Is just showing off and in testament to how well you do know these markets and your charts, bro. So congrats on that. But I will just call you out a little bit and been like,
now I'm just showing off with the Kanye.
Now you're just showing off, dude. Coming up with a Kanye Shaq.
Listen, wait till you see these dancing bubbles. You think I'm showing off now? Oh my God, we're gonna have them dancing and playing music in the background just for shits and giggles. You should see, they're so sick. They change colors and they get bigger based on market cap, and they change colors based on sector. Oh my God, dude, you don't even know.
I love it. Hey, Strike. So my team, if you could do me a favor, because I do want to go into a couple of these ticker symbols. So if you guys would do me a favor, we told everybody who would stick around for you that you're going to get access to this little docu-series video that we put together. So if you guys could post that video into the chat with everyone, I would appreciate it. I know that I actually have the link. Oh, there it is. Wow, my team's fast. Thank you so much. I appreciate that. So that's the link right there. Register for it. You can see the video that's there. If you're a newcomer and this is your first or second chart room, welcome. We appreciate you being here. The fun part's just about to get started. But before we do, take a minute.
What do you mean that wasn't fun? I was having
registered. Fun. People like to hear about their own stocks and ticker symbols and stuff like that. So we have a few minutes. I'm going to let you, JC, go through and pick the ones that you want to call out. I know the first one was Lulu. So JB wanted to know about Lulu. If you wanted to pull that one up, he was like one of the first ones to drop in there, that ticker symbol.
You know, I got to tell you, this Lulu, they just bought the mirror.
Yeah,
you know, that thing is awesome, man. You get my yoga game is on point because of that thing. On point, Jeremy. You don't even know. Like Sean today was like, JC, I could picture you doing a lot of things, but yoga's not one of them.
I would 100% agree, and nor would I picture you being the one that owned the mirror. Like, that's cool.
Well, my wife wanted it, and as it turns out, I'm the one who uses it all. I mean, she uses it. She likes like the kickboxing class and stuff like that. Listen, I mean, for me, this yoga thing, man, I'm on a serious yoga kick. I'm actually going to do my, as soon as I'm finished writing my book, I'm going to do the 200 hours to get my yoga instructor certification. So that what we're going to do is when we start hosting events, when the world's back to normal, I'm going to host the wine tasting at night. And then I'll do the yoga class in the morning.
I love that, dude.
You like that?
I do like that.
That's the move.
I've tried to get into yoga, not once, not twice, but 3 separate times.
It's the best, bro.
Because I golf a lot, right? So helps with my golf game. And
it's true.
That all the time. We will send out a replay link.
It helps with everything. It helps with everything, and it just makes your life better. It's great. Yeah. All right, so this Lulu is hot, baby. It is hot. I am liking this Lulu. So here's the sitch. You want to see the sitch?
Yep.
All right. Who is it that wants the Lulu? JB?
Yep.
All right. JB bought me a nice bottle of wine once, so we're going to hook him up. 315, man. That's the level. Look at this. I mean, this goes back to the original high. Look at these Fibonacci extensions. I mean, really coming into play. You know, that 76 really came into play for like half a decade. Look at that.
Yeah.
You know, then that 423 turned into support, and this 1109% extension from that decline. 315 has been a little bit of trouble. You know, to me, that's a high and tight flag, like a military fade, baby. High and tight. So I like a breakout there. We want to be buying that breakout. So why don't we do a little zoom in action? You know, I like to start with, you know, this is for you newcomers. This is sort of that top down approach, multiple time frame. We start with the long term, right? Big picture. It goes from the lower left to the upper right, folks. That's what we call an uptrend. And I know that some people are like, thanks, JC. But like for real, like hello, like the first thing we want to do, is it going up or down or sideways? Like that's the first thing we need to identify. And yes, it might be quite obvious, but guess what? Most investors don't do that part. They just skip it. So yes, uptrend. Thanks, JC. Okay, fine. That's part of the process. The first thing we need to do. It's going up. So then let's zoom in. Man, this is sexy, Jay. You know, this is what we call strength, you know, because markets can consolidate in one of two ways. They can digest gains through time, sideways, you know, showing buoyancy, where the buyers are getting, more and more impatient, so you don't get dips, or you can get a severe correction with price, right? Those are the two ways. And obviously the healthier of those two ways is through time, right? Consolidate sideways, and shit, this thing keeps pushing up against new highs. Like, this has breakout written all over it. Next target 500. I don't know. Do the math, math majors. What is that? 40%? I don't know. Something like that. Anyway, a lot, right? Man, you know, you got 200 points almost on a $300 stock, 60%, 50, 60%. That's beast mode.
Beast mode. I like it. That's like an alley-oop right there from JB. Nice.
I think you knew what I was going to say, though. Thanks, JB.
Yeah, that's nice. I like it. Well done. I love that trade as well. I love their shirts. It's a good brand, man.
Well,
all right, we got time for maybe one or two more.
We're going to look at the ODFL, Old Dominion Freight. Talk about an uptrend. I mean, this thing, speaking of beast mode, I mean, this is beast mode.
Oh, it's another alley-oop.
You know, this is what that looks like. So this is 194 coming next. Probably get some consolidation there. You know, I like this because this one already met its extension and is consolidated right at it. Yeah. So I like this better. This one's getting there, you know? A momentum in a bullish regime. That's hot, baby. That's hot.
It goes from left to right, just like we want, right? Bottom left.
Well, it's what we want if we're buying them, right?
Yeah, exactly. So I like that as well. Nice. So this has been great, man. Everybody, again, if you're new and if you've been around for a while, I'm always impressed with you, JC, being able to go from, we just talked about a freight line company to a clothing apparel / tech company, and, you know, and anything in between. So that's the power of this approach. We don't need to go and dive into balance sheets and headlines and like what the CEO ate for breakfast. We can actually look at the behavior of the price, which in our opinion dictates what is going to happen going forward. And then we find the ones that have the most favorable statistical odds of doing what we think it's going to be doing, and then investing in those. So JC, any parting words for everybody tonight?
You know, fighting trends is hard. Like, it's a hard way of life, you know? You're signing up for more headaches by fighting trends. You're signing up for more missed opportunities. You're signing up for more frustrations. You know, if you need to build yourself a checklist for all of the things that need to be checked off for you to fight trends, because listen, we were fading stocks in January, February, and the trend was up until then. So there are things we look for to fight trends. So don't get me wrong, there are times to do that, but those are few and far between. So I like living a good life. I like smiling. I like hanging out with good people, you know, having a few laughs, telling stories, talking shit. Like that's what I like to do. And, you know, people that fight trends, I see them. They are not happy. Smart people don't want to talk to them. They're just not living good lives. I see it. I see it. Trust me. Take my word for it. I see it every day. Those that are participating in trends are winning. Those that are trying to get cute and find, you know, garbage, you know, dumpster dive and fight the trends that are working. It's harder, man. It's just harder. It's not worth it, I don't think.
Live a happier life by gaining a friend. And the trend is that friend.
I like that. I like that. That's good.
Right? Ladies and gentlemen, it's always an honor and a privilege to be here with everybody tonight. Your time is important. We understand that. So thank you so much for choosing us. This is Jeremy Blossom and JC. Peace out, everybody. We'll see you guys next week.
Salud.
Cheers. Thanks, guys.